Hello guys, it's Collins FX here again. So now we're looking at USD JPY on this trade. So I'll switch down to the daily time frame to look at the buyers of the market. So now as you can see, we are on an uptrend still. We are on an uptrend. We are going to be looking at one particular area of the market. We're still on an uptrend, and if you can look closely on the daily time frame, price went to this area that had action. Price went back there, tapped in the area. Yeah, price went back there, tapped in the area, and started moving upwards. So we'll be looking at this side of the trade, just this side of the trade. So now let me switch down to my 4 hours time frame and see what's happening. So you can see clearly now at this point, there's a region here. There's like a support here. Did I say support? There's a demand here. So now it's holding price from going lower. This point is holding price from going lower. So now I'll switch down to the 1 hour time frame. I'm just looking for areas of confluence constantly. So now as you can see here again, what we are looking at is an area of break of structure and how price went back to that same break of structure, to the candle that caused the break of structure. How price went back to the candle that caused the break of structure and reacted to it. So now we're looking at this part of the trade on USD JPY. So if you can look closely, you see another block, and this is the other block here. I'm going to mark it out. Let me cancel this previous one I drew on the 4 hour, so you can see it clearly. So I'm going to clear this one out, and if you can look closely, you see how to give you a sweet and exit entry on the market. So this is it now. If you can look closely, you are going to see how this trade played out. Now look at this. Was the break of structure. This was the break of structure. So after I mapped out the break of structure, price made an inducement, because I'll always tell you guys, after every break of structure there will always be an inducement. So look at, let me mark it out again. So this is it clearly. Now this was the inducement. This box right here, this was price inducement. So its inducement will give you two options. Is either going to the fair value gap of the other block to give you other traders a chance to enter the market, like now, because if you are looking for a break of structure, you need to identify three things. Note this down. Three things. One, a valid opposite order block, either bullish or bearish. A fair value gap. There must be a fair value gap for it to be valid. And this trade, this strategy is, I would say, is 75% active. It works 75% of the time. Now if you can see clearly, price made sure that it also took other people in after it made a break of structure, bringing an inducement inside. So now tapped in, and now boom, to this same region, this region now. So if I missed this trade now, I'll be like, okay, I'm waiting for price to come back to this other block, because price must, if it's a valid break of structure. If you can see clearly, it's also an head and shoulder pattern. is also an inverse head and shoulder pattern. This is a shoulder, this is the head, and then this is another shoulder, then upwards. So but we're not looking at that yet. So we're looking at break of structure. I'm trying to teach you guys how to find a break of structure. Now I would wait for price to come back. Patience is always the key in forex. You can't just be saying you're a forex trader without patience. You can't say you are a forex trader without patience. Patience wins most of the time. Even if you don't see a trade in a day, you don't have to trade, because having to trade most of the time, you are going to blow your account too. It's not easy out here, guys. So now this, I'm going to wait for price to come back to this level. Sweeping the inducement is it always matters. Sweeping the inducement matters. See, this was the inducement. See as it was swept. It was swept, and now price tapped into the original order block that caused the break of structure. If I wanted to target now, I'm going to target the previous high, which is putting my entry at the beginning of the order block and my stop loss at the bottom of the order block, a little bit lower, like I said in my other video, a little bit lower, just in case price wants to liquidate or take out people. Because most of the time, if I put my stop loss at my order block or the ending of my order block, it's most times, I will just say 80% of the time I get stopped out. So I put my stop loss a little bit lower than the order block and extend my TP to the previous high. So you can see how this trade went out now. I'm just giving you guys an analysis on how to find break of structure, order block, fair value gap that caused break of structures, and inducements. Yeah, don't forget inducements. Those three. After an order block, look for after an order block, look for a fair value gap. After the fair value gap, look for an inducement. After the inducement, wait for price to come back to the order block that caused the break of structure and sweep the inducement. Then you look for a nice trade. Now this trade now, I didn't take it. I took it on my MT5. I took this trade on my MT5. I'm just making another video of how I analyze the trade. So this is the end of this video, and please like, share and subscribe. If you find my video or my channel interesting, please watch more of my other videos. It's educating. Thank you.